Welcome back to another video, everyone. In this video, we are going to cover support and resistance. I'm going to break down what is support and resistance, what can happen around our critical levels known as support and resistance, establishing our critical levels, how to establish them, how to find our key points such as support and resistance, and important things to keep in mind about critical levels. So in this lesson, I'm going to break down everything about support and resistance, and then in the upcoming lessons, I will show you how to apply them. So first and foremost, what is support and resistance? So support and resistance are critical levels on a price chart where supply and demand meet. So in this situation, if this is support, whenever a stock price hits this level, most likely demand kicks in and brings the price up. If this is resistance, most likely the stock hits a supply zone and the stock starts coming down, right? So for example, support. Support is an area on a chart where buying pressure is usually stronger. In this situation, you can see stock hits this level known as support. What happens? Goes up. Hits this level as support. What happens? Stock goes up. Hits this level of support. What happens? It goes up. So at this level of support, we have buying pressure, we have demand presented here. This is known as support. Beyond support, we have something called resistance. Resistance is an area on a chart where selling pressure is usually stronger. So you can see stock goes to this point. What happens? Gets rejected. A lot of selling pressure. Goes to this level. What happens? Gets rejected, known as selling pressure, which is called resistance. Once again, gets to this level and it's looking like it's about to get rejected again. Now, if you look at this chart, it's the same chart. Support, resistance. Support is basically the floor. Resistance is technically the ceiling. They showcases levels of demand and levels of supply, right? Demand is increasing here, demand is decreasing. Demand is increasing, now it decreases. Support showcases us there's a high probability that the stock may possibly go up from here. Now, what you have to understand is support and resistance are critical levels and are interchanging. What do I mean by that? You can see, this is support, resistance, support, resistance, support. Boom, what does the stock do right here? It breaks resistance, and yes, a stock can break resistance. Yes, a stock can also break support, so keep that in mind. Once again, when the stock breaks resistance, that resistance level, which is right here, that resistance level, right here, now becomes support. You can see support, new resistance level, support, new resistance level, or the same resistance level we had, support, and you can see it now breaks resistance again. Now, since it broke this resistance is now our support. Just to refresh once again, support, resistance. If resistance gets broken, that resistance level now becomes support. If a support level gets broken, that support level now becomes resistance. These levels are interchanging depending on where the stock is trading. Since the stock is currently here, since it's trading right here, this resistance level where the stock had a hard time breaking is now our support level. So if the stock does come back down, there's a high probability it may possibly bounce off this level. But if it doesn't bounce off this level, which was our support, is now resistance. Right, now I'll show you an example. So when you guys look at a stock chart for the first time, you're gonna get a naked stock chart. As you guys seen before, we have a naked stock chart, right? Price action right here, we got volume down here, just to refresh once again. Now, if you look at the stock chart, we don't have any critical levels. Our job as traders is to identify critical levels. Our job is to identify what levels did this stock have a hard time breaking. What levels did this stock have a hard time breaking? You can see multiple times what happened at this level. Resistance, right? Resistance, resistance. Now this resistance level got broken. As the resistance level got broken, that resistance level now becomes support. This is now our support point after it got broken. Same thing here. What's our new resistance point? We have a resistance level right there. You can see resistance, resistance. If this resistance level gets broken, that is now our support, right? So our chart with critical levels will look something like this, right? It will give us an idea of giving us a chart idea that looks something like this. We can maybe have something else here too. Once I break this down more moving forward in another lesson, you guys are going to see how to apply them. But just focusing on the main ones, you can see resistance. Originally, you can see what happens. Resistance, that resistance level gets broken. New resistance level, this area becomes support. Resistance, support, resistance, breaks resistance. Now that level becomes support. And you can see stock comes back down there, works as a level of support. Now, what can happen around the critical levels? As you guys saw, the stock can get rejected from them. That's A. So if you have a resistance level, there's a possibility the stock can get rejected. The stock can break from them. So if that's a resistance level, the stock can break. Or sometimes the stock can push through them just by enough to stop you out before it reverses, which is known as a false breakout. I'm going to go over breakouts in the upcoming lessons, but it would look something like this. And boom, it comes down. It breaks that level or area a little bit and comes back down. Works the same in support. If we have a level of support, stock may hit that and bounce. It may break right through it, or it may break and then come back up. Any of the three can happen. Now, what you have to understand is whatever the market does, by observing the action at or around the level, you are able to find context with which you may be able to identify excellent trading opportunities. Now, the idea of having your critical levels is that it allows us to be aware that at this point, we have to be aware. Let's say this is $10. We have to be aware at $10. Depending on the context of the play, depending on the direction of the stock, depending on the market direction, depending on the company sentiment, we can actually make very high probability trades around this level by focusing on the context. And you guys are going to see what I mean by that as we move forward. But understand, just because a stock hits support does not mean you should buy, right? Just because stock kind of goes below support does not mean you should short or sell. There's a lot of other things you have to look into, as I mentioned in the previous lessons. You have to add more pieces together to get the highest probability trade. Now, in this situation, you can see stock gets rejected, right? Gets rejected, and boom, what happens right here? It breaks that resistance level, right? And this is on an intraday time period. Right? We're on a 5-minute chart for stock Shopify, meaning each candles represent 5 minutes. I'll show you how to apply your critical levels, what time frames to go on, and all that moving forward. But for now, just focus on what's in front of us. And like I said, you can see it breaks out. Is that a strong breakout? Yes. You can see, look at volume, right? Look at volume. Volume starts slowly picking up, right? Strong move up, strong candles, breaks the critical level. What happens here? Small body candle. Body takes a break, the candle takes a break, volume goes down, which is totally fine. A lot of people get this confused, right? They see volume going up, and they're like, oh, the volume needs to keep going up. No, stock made a huge move up, it needs to take a break. The stock takes a break, volume takes a break, and then what happens right after? Right after, there's continuation, right? You can see it goes up, and there's continuation. That's what you want to be able to see in the play. On the continuation play, it is showcasing us volume is picking up, and that is a strong signal. You can see it breaks that level. This level acts as resistance, right? Once that level gets broken, that level now becomes a support point. You can see support, support, support. And you can see multiple times the wicks are showing us what? Remember when we went over the wick topic, the candlestick topic? The wicks are showing us that buyers are stepping in. The buyers are stepping in. The buyers are stepping in. So we know around this level, there's a lot of demand. Before, there wasn't demand. Once the stock broke out of this level, the demand has now shifted. Before there was resistance, that resistance now becomes support, and we know around this area we have a lot of demand. Now, another thing you need to keep in mind with support and resistance is that support and resistance are areas that are not exact lines. So if you look right here, you can see they become areas. They're never an exact line. So never say 10.05 is my support. That if the stock breaks 10.05, right, I'm going to sell or I'm going to short. No, it is an area. You can see around here becomes an area. So it'll look something like this. If you look right here, for stock Roku 5-day, 5-minute chart, this is a 5-minute chart. Each candle represents 5 minutes. You can see it's this small little area. You can see stock goes down, buyers step in, right? They pick it up, get rejected again, comes down, buyers step in, sellers reject, comes back in, buyers step in, sellers reject. It goes back to our area, and you can see what happens. Bulls and bears are a little indecisive, and then the moment the bulls step out of the way, the aggressive buyers step out of the way, what happens to the stock? And look at volume. Strong move down. Goes down, takes a break, goes down, right? Nice move down right here, right? There's a reason this went down. I'll break that down in the upcoming lessons, but based on just simple raw price action, you can see support area, stock is getting pushed down. As it's getting pushed down, right when it gets outside of that critical level, you can see volume surges up. Volume is showcasing us a strong sell-off, and you can see, boom, stock pushes down. Now, what you have to understand also is the more times a critical level is tested, the weaker it becomes, right? So for example, the market reverses at support because there is buying pressure to push the price higher. The buying pressure could be from institutions, banks, or smart money that trade in large orders, right? Now, if the market keeps retesting support, these orders will eventually be filled. And when all the orders are filled, who's left to buy? So for example, if this is support and a support level keeps getting tested over and over and over again, there is a possibility that all the orders are getting absorbed. If you look here, you can see all of the orders are getting absorbed. You can see stock goes up, buyer step in, 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 and boom, buyers did not step in. All the orders got absorbed. If there's high volume here on this candle, that's a strong move down. It just broke our support area. Now, that doesn't mean at all times this is going to hold. Right? That doesn't mean it's always going to go down or it's going to hold at all times. Sometimes stock may keep bouncing here and then eventually keep running. There is a possibility. Remember, our trade does not kick in until it breaks. We never, ever trade in between here thinking that it's going to go up or down. No, we need our confirmation. It needs to break this level with high volume. Remember, high volume on a strong break, something like this is a strong break, confirms a strong move down. It showcases us that people are behind this move. This is a strong move. There's commitment behind this move, and the stock goes down, and you can see starts moving down over and over and over again. All right. Now, taking trades around critical levels. Like I said, do not just take a trade because it's hitting support or it's hitting resistance. You need to understand the different type of things that can happen around these levels. So in example A, stock hits support and you get a buy signal. If the stock hits support and you get a buy signal, and we'll go over multiple signals that will give you a confirmation to buy, you place your stop loss below your support level, make sure to give yourself room, and you take the trade. So if this is support and a stock is going right into support, we never buy unless we get a buy signal. I will break down the buy signals once we get to that. Now, if we get a buy signal and it does start bouncing, we do see strong buying pressure. There is maybe some new catalyst or new news that comes in that's giving us a new trade idea. there is volume, all these things are present, cool. We can take a trade, put a stop loss a little bit away from our support. So if our support is 10, our stop should be maybe 950. We don't want to put our stop right at 10. Why? Because if you put our stop at 10, there's a high possibility market makers are probably going to stop us out, and we don't want that. Right here, stock breaks the support area and retests critical level. Sometimes the stock may break support and then it's retesting. If it retests that area, right, if it breaks support and it's retesting, and you see a continuation sell-off, you can always enter as a short play. Now, if you enter as a short play, once again, you want to have some confirmation here. Enter your stop loss and take the trade. And then finally, a stock just breaks through your critical level with aggressive selling. Now, obviously, you need some confirmation around here. You need some context to actually take on the trade. But these are three scenarios that may possibly happen around support. Sometimes the stock may just trade around there, continue. Sometimes it may trade around there and sell off. But you want to wait for the confirmation. Once again, just because the stock is hitting support, you don't buy. Just because the stock is hitting resistance, you don't sell or short. You want to have a reason. You want to have more confirmation. Support and resistance is not enough. You want to and need to look at the context of the play, what's surrounding it, such as market conditions, such as the company's sentiment. All these things are very, very important. Now, every moment is unique in the market. So you have to understand that every single moment is unique in the market. No moment is the same. Trading based on just support and resistance levels alone is like trading with blinders, right? And a very bad thing to do. As I mentioned multiple times, if you're buying a stock just because it's going into support, very bad way to trade. Now, some questions to ask yourself is A, are the same market conditions present that were present before? Are the same traders who turned the market before, are they going to be there again? For example, let's say stock hits support and goes up. Just because it's coming down again does not mean that it's going to bounce up like it did before. Can it bounce up? Yes, there is a possibility. Can it go down? Yes, that's a possibility too. We do not take on the trade until we get a confirmation. The confirmation will not come until the stock shows us something around this level, until price action confirms that buying pressure is kicking in. Maybe a company's sentiment changes, maybe market direction changes, maybe some new fresh news came out that's kicking in. Right? So you have to understand, not every moment in the market is unique. Every single moment is going to be different. So this could be, let's say, in March, right? This could be in June, and this could be in September. Every single touch on that support level is different. Different market conditions, different things are present. So you need to understand that every moment is unique in the market, meaning do not trade just off support and resistance levels. Do not do that. Now, if you look right here, we have critical levels on a daily time frame. Or stock Apple, I've showed you this chart multiple times. I'm going to show it to you again. You can see demand zone, meaning support area. Support multiple times. Once that demand area broke, what happened? Stock flushed down. That same demand area is now resistance, meaning supply zone. Pulls back. That same level is now supply zone. Supply zone. Now, if you look at this, this is an area, right? You can look from $215 to $210. Stock Apple is a major resistance level or support depending on where the stock is. So if the stock is below here, this is resistance. If the stock gets above that level, that's support. So understanding that is very, very important. Now, like I said, the context here was much different than here and here. The market conditions here were terrible. They worked that support, terrible market conditions, and a lot of other factors. And look what happened to Apple. Stock fell. Stock tried to go break that level again. Now, it wasn't able to break that level because A, it's hitting a resistance point. But just because it's hitting resistance does not mean we short. We want other sets of confirmation. Other sets of confirmation this was around the time of the trade war issues, right? Same thing here. Trade war issues made the company take a big hit. And being at a critical level gives us an edge that this may probably go down or sell off. And that's what happened. Same thing here. If you look around here, showed you this chart too. I'm going to show it to you again. To click the pieces more, you can see supply zone. Demand zone. Stock goes here, demand zone. There's demand, there's demand, there's demand. Now, like I showed you with how orders get absorbed, it didn't happen here. So for the people that are like, oh, the orders are going to get absorbed, let me short, probably lost money. A good trade was to wait for it to go below that point, right? But you can see orders are trying to get absorbed, but finally something maybe came out and drove the stock price up. But now looking at this, right, you can see support, stock goes right into that support level, breaks it. That support level now becomes our resistance point, and you can see stock starts selling off, increased volume. You have to understand the factors that were present here and here are completely different, especially when you're trading on a daily time frame, right? There's a lot more things going into the trade. If you're trading on like a 1 minute or 5 minute, you gotta understand in like a 15-minute time span, not a lot has changed. But on a daily time frame, something from like May going all the way to about August, September, a lot can change with the company and a lot can change with the market direction. So very important to identify that. Now, some support and resistance tips. Number one, identification of key support and resistance levels should be one of the first steps to take with price action. So this is something that you should always have applied. Every single stock you look at, you need to have your critical levels such as support and resistance applied. Do not focus on establishing exact support and resistance lines. Look for areas instead. So for example, if let's say a stock looks something like this, right? You have to understand that this is not an exact line. It is an area. This might be the area. This might be the area, right? It's an area. So around this area, there is a lot of demand or buying pressure. So if the stock breaks this area, I will then get into my short position, because what happens is a lot of people have a line, and when the stock goes below the line, they take on a trade. No. Focus on the area. If it goes outside of that area, you see increased volume, a strong move down, good. That is strong sell-off, right? Now next, don't take on a trade just because a stock is reaching its critical support or resistance level. Do not do this. And I bring this up so many times because a lot of people ignore this when they are in front of their computer and they're trading with real money. Do not take on a trade just because a stock is reaching its critical support or resistance level. There's a lot of other things you need to factor in. Next, it's supposed to be number 4, but okay, whatever. Just ignore that typo. If a support or resistance level is broken, it signals that the relationship between supply and demand has changed. So if this is support and that support gets broken, that is now resistance. If that's resistance and that resistance level gets broken, that resistance point is now support. And finally, just understand that every moment in the market is different. So do not trade just off your support and resistance levels. As I mentioned right here, do not trade just off support and resistance levels. Just to recap everything, support and resistance are very, very important things that you should have applied in your stock chart. There are critical levels that showcase where buying may possibly happen, where more selling may possibly happen, where buyers may be aggressive, sellers may be aggressive. But you need to understand that having these applied and knowing how to apply them are very important. So in this lesson, I'm just, as I mentioned, explaining what they are so you have an idea. In the upcoming lessons, I will apply them with you live and show you examples so you get a better understanding on how to apply them.